business's health.
All right.
And we're going to explore whether we can actually use those numbers to predict a company's future and how AI and machine learning are shaking things up in this whole world of finance. You brought some really interesting research on this, so I've got a lot to unpack.
Absolutely. Yeah.
Thank you for tuning in to Quantopian's Quant Radio, your AI-driven podcast exploring everything related to quantitative finance. If you enjoy this episode, don't forget to like and subscribe to stay updated on future releases. For more quant-focused content, join us at community.quantopian.com. There you can explore a wealth of resources, connect with fellow quants, engage in insightful discussions, and enhance your skills through our extensive range of online courses. Quant Radio is intended to help people develop their knowledge and skills in quant finance. This podcast is not intended to provide investment advice. And now, back to the episode.
This research is really tackling a fascinating question. Can we use company fundamentals, things like their revenue, profits, assets, those sorts of things? Can we use those to predict where a company might be headed in the future?
Like, is this company going to be the next big thing, or are they heading for a crash landing?
Exactly, yeah. But before we jump into, full-on crystal ball gazing, let's take a step back for a second and just remind ourselves, what are company fundamentals exactly? I mean, most of our listeners are familiar, but just to set the stage.
I think it's always good to have that shared understanding.
Absolutely. So think of it like a doctor giving a patient a checkup.
Okay.
They're going to check your heart rate, blood pressure, temperature, all these vital signs that give a picture of your overall health.
Okay, so we're talking about the financial health of a company.
Exactly. Company fundamentals are like those vital signs, but for a business, we're talking metrics like total revenue. So how much money is the company bringing in? Operating income, that's their profit after deducting operating expenses.
Makes sense.
Net income, even more refined, after all expenses. Yeah. And then, of course, cash flow. How much cash is actually coming in and out of the business? These are like the building blocks of understanding a company's financial strength and stability.
So like a financial report card, basically.
Exactly.
Okay. But how do these fundamentals, these financial vital signs, how do they actually help someone make investment decisions?
Well, investors use these numbers, these fundamentals, to try and assess a company's potential for growth and profitability. Is this a company that's going to be a market leader? Are they going to be bringing in strong profits down the road? Or are they going to fall behind?
So are they like a prized racehorse, or are they more of a slow-moving donkey?
That's a great analogy. So investors are trying to get a sense of, is this a good long-term bet? Is this company a sound investment?
Okay, that makes sense. Here's the real question, the million-dollar question. Can we actually predict these fundamentals? Can we use these numbers, these financial vital signs, to get a glimpse into a company's future?
Well, that is the question that this research is really trying to tackle head-on. They dug deep into the world of AI and finance, trying to use machine learning to forecast company fundamentals and compare those AI predictions to what human analysts are doing.
Wow.
And one of the first things that they had to grapple with is the data itself. I mean, they were working with a data set that covers over 2,500 companies, and it's a wealth of financial information spanning over a decade. So this is a huge amount of data to work with.
Oh, yeah. Talk about a data mountain.
Yeah.
What made this data so tricky, so challenging?
Well, financial data, as anyone who works with it knows, is notoriously messy. It's constantly changing. It's influenced by so many different factors, the economy, global events, you name it.
Right.
And it's susceptible to things that you just can't predict, like, a global pandemic.
Yeah, I bet the COVID-19 pandemic threw a real wrench in their models.
Absolutely. That's one of the things that makes this research so fascinating. They didn't just ignore the messiness. They really tried to figure out how things like the pandemic can throw off predictions and just make forecasting so much more complex.
Okay. So they have this mountain of data. They're trying to predict the future. What kind of approaches did they use to tackle this? I mean, what kind of AI are we talking about?
So they tested a whole range of forecasting models, everything from simple statistical methods to the really cutting-edge deep learning algorithms like LSTMs, transformers, those sorts of things.
Okay, so what did they find? Was the AI actually able to predict a company's future?
Well, the results were actually pretty surprising. First off, they found that these deep learning models were really good at predicting some of the company fundamentals, especially when it came to figuring out how certain they were about their predictions.
So the AI was saying, like, I'm 80% sure about this prediction, or this one's a bit shakier, only 50% sure.
Exactly. It's not just giving you a number. It's saying, hey, this is how much you should trust this number.
Okay, that's really interesting.
But of course, some things are just inherently harder to predict than others.
Right.
They found that forecasting something like total equity, that was relatively straightforward. But then you have something like operating income, and that proved to be a real head-scratcher for the models.
It's kind of like predicting the stock market. Some things are just so volatile. What do you think made operating income such a tough nut to crack?
Well, operating income is influenced by a lot of fluctuating factors, cost of goods and services, all those things that are constantly changing.
Okay.
So it's kind of like trying to hit a moving target. And the researchers suggest that this inherent complexity just made it really hard for the models to make accurate forecasts.
Gotcha. And what about the pandemic's impact? You mentioned that earlier. How did these huge global events affect the accuracy of the predictions?
Yeah. So the pandemic is a perfect example of what people call a black swan event, something completely unexpected that had this massive ripple effect across the entire global economy. And one of the things they found is this idea of scar tissue in the models.
Scar tissue, what do you mean by that?
So it's not just that events like the pandemic threw off the predictions in the moment, it's that they actually impacted the model's ability to forecast accurately for years afterwards. Like the models were still kind of reeling from that disruption.
Interesting. So it's almost like the pandemic created this disruption echo that made it harder for the models to find those familiar financial patterns. But here's what I'm really curious about. How did the AI's predictions stack up against those made by, the humans, the experts?
Yeah, and that's what I really love about this research. They didn't just focus on the AI in isolation. They wanted to understand how these fancy algorithms were performing compared to good old-fashioned human intuition and expertise.
Okay, so drum roll, please.
Okay.
Who came out on top? Was it machines or humans?
Well, you might be surprised to hear that in some cases, the AI models actually outperformed the human analysts.
Really? Hold on, are you saying the machines are smarter than us when it comes to finance?
It's not quite that simple. While the AI definitely showed its strengths in certain situations, it's important to remember that human experts bring a lot to the table. They've got years of experience. They have this intuition that's hard to replicate in an algorithm.
They can see those big picture trends that the AI might miss, right?
Exactly. And they have a deep understanding of those market nuances that AI models are still learning.
Right. So it's not really a case of versus. It's more about finding ways to leverage the strengths of both, right?
Absolutely. What if we could combine the analytical power of AI with that nuanced understanding that human experts bring to the table? Imagine the possibilities if we could build even more powerful forecasting tools by blending those two approaches.
It's a really interesting thought. Makes me wonder if we can teach the AI to think more like a human analyst. Do you think that's possible?
Well, that's the idea behind what's called explainable AI. These are techniques that help us understand how the AI is making its decisions. What factors are they looking at? Why are they making this particular prediction?
So instead of just blindly trusting the AI, we can actually understand its reasoning and see if it's making sense.
Exactly. We can kind of peek inside the AI's brain and get a better grasp of how it's arriving at its conclusions. That kind of transparency could really help us refine the models and make those predictions even more accurate.
So it's like having a conversation with the AI. You can ask it questions, challenge its assumptions, and help it see things from different perspectives. That's amazing.
It really is, and it opens up a whole new world of possibilities for collaboration between humans and machines.
Absolutely. But let's bring it back to our listeners for a minute. What does all this mean for someone who's actually trying to make investment decisions in the real world?
Well, that's exactly what the researchers wanted to find out. So they put it to the test with some simulated investment scenarios.
So they basically gave the AI some virtual cash and said, all right, go make us some money. What happened? What were the results?
The results were pretty fascinating. In a lot of these scenarios, the portfolios that were built using the AI's predictions, they actually did better than a standard market index, something like the MSCI World, and sometimes by significant margin.
So the AI was basically picking stocks that beat the market. That's pretty impressive.
It is, but, it wasn't always smooth sailing. There were definitely periods where the AI-driven portfolios, they lagged behind, especially during times when things were really volatile. Think about the initial shock of the pandemic.
Yeah. So it seems like the AI is good at spotting opportunities,
Yeah.
but maybe gets a little jumpy when things are unpredictable.
Exactly. It kind of highlights the fact that, managing risk is so important in any investment strategy. It doesn't matter if it's AI or just good old-fashioned human judgment.
Right, right. You mentioned earlier that the AI's predictions, they were also compared to those made by those human analysts. How did those two approaches stack up against each other?
Yeah, so the researchers, they had access to this data set of expert predictions. These came from Refinitiv. It's a leading financial data provider.
Okay.
And these were like real-world predictions made by financial analysts about a company's future total revenues. And when they compared those human forecasts to what the AI was doing, the results were actually surprisingly close in a lot of cases.
So it was kind of a neck-and-neck race between the AI and the humans.
Well, not exactly. The AI did have a slight edge when you looked at the overall accuracy, but the human analysts, they seem to be better at adjusting their predictions, calibrating them to the scale of the data, I guess you could say.
Okay, what do you mean by calibrating to the scale of the data?
Sure. So think about it this way. If a company's revenue is like in the billions of dollars, even a tiny little percentage error can translate into a massive difference in real terms, like millions of dollars off.
Oh, wow.
And the human analysts, they seem to be more aware of this. They were making smaller errors on companies that were smaller and bigger errors on those massive companies. Whereas the AI, it had this kind of consistent error rate no matter how big the company was.
So the humans were thinking more proportionally, while the AI was thinking in absolute numbers. That's an interesting difference.
It is. And that actually might explain why the human analysts scored better on certain metrics, like what's called mean absolute percentage error, even though their overall accuracy was a tiny bit lower.
Huh. Fascinating. It really shows you the strengths and weaknesses of both human and artificial intelligence. One of the things that I thought was really cool about this research was the emphasis on understanding the uncertainty around these predictions. Can you talk a bit more about that? Why is that so important?
Yeah, absolutely. This is where the idea of what's called probabilistic forecasting comes in. Imagine the AI not just predicting, what's going to happen, but also saying how confident it is in that prediction. So instead of just giving you a single number, it's giving you a range of possible outcomes and saying, hey, this outcome is more likely than this one.
Okay, so it's more like saying there's a 60% chance that this company's revenue is going to be between this much and this much next year, rather than just saying it's going to be this exact number.
Exactly. It gives you a much more complete picture. And this ability to quantify that uncertainty, it's super important for making good decisions, especially when we're talking about investments.
Right. So if you know there's a lot of uncertainty around a particular prediction, you're probably going to be more cautious.
Right. Absolutely. And what they found is that some of the AI models, they were actually really good at figuring out how uncertain they were. The deep learning models, especially the ones using those LSTMs and GRUs, they consistently gave more accurate and more calibrated what we call probabilistic forecasts compared to the simpler methods.
So they weren't just making predictions, they were telling you how much you should trust those predictions. I mean, that's pretty powerful, right?
It is. But before we move on, I want to touch on that idea again of integrating human expertise into these models.
Yeah, I was just thinking about that. It seems like there's so much potential there.
Absolutely. The researchers looked at a bunch of ways to incorporate, that domain knowledge, human insights, that expert intuition, into the AI's whole forecasting process. And one of the really promising things they talked about is using, again, this idea of explainable AI. That way you can actually see what's going on inside the black box of the AI.
Right, instead of just blindly trusting it.
Exactly. So once you understand how it's making decisions, you can start to guide it, refine the models, and bring in that human expertise to make the predictions even better.
So it becomes this two-way conversation. You can ask the AI questions, challenge it, and offer different perspectives.
Precisely. And it really feels like this could be a win-win for both sides. But with all this talk about how sophisticated AI is becoming, I've got to ask, what does this mean for jobs in finance? I mean, are we all going to be replaced by algorithms? I think that's a concern that comes up a lot whenever we talk about AI and machine learning. And sure, there are definitely some tasks that are going to be automated, but personally, I don't think AI is about replacing human expertise.
Okay.
I see it as a really powerful tool that can actually help us do our jobs better, make better decisions, get more insights.
So it's not about AI versus humans. It's about AI and humans working together.
Exactly. And I think this kind of collaboration has the potential to not just change finance, but a ton of other industries too.
That's a really empowering thought. I mean, this whole deep dive has been incredibly insightful. I bet our listeners are feeling just as fascinated as I am right now. What would you say is the biggest takeaway from all of this research, especially for people who are trying to make sense of the world of investing?
I think the key takeaway is AI is becoming a huge force in finance, but it's not a crystal ball. You know, we got to approach these AI-powered predictions with a little healthy skepticism, understand the limitations, and always remember the bigger picture.
And keep in mind that human expertise, that's still so valuable, right?
Totally. Human analysts have years of experience, that intuition, and a deep understanding of how the markets really work. Things that AI models are, they're getting there, but they're not quite there yet.
Right. So it's really about finding that right balance, figuring out how to use human intelligence and artificial intelligence together, make them work as a team.
Absolutely. As we go forward, the investors who can do that, the ones who can harness both sides, those are going to be the ones who really succeed, I think.
Well,
Yeah.
this has been absolutely fascinating. Our listeners, I'm sure they have a lot to think about after this, a lot to mull over as they, navigate the world of AI and finance, all this new stuff coming out.
Yeah, I hope it sparked some ideas, maybe even inspired some new ways of thinking about investing. Who knows?
Me too. A huge thank you to you for sharing your expertise with us today. And to our listeners, thanks for joining us. Keep learning, keep exploring, and keep asking those great questions. Until next time.